Hello everyone and welcome to yet another Wyckoff video. Now I'm sorry for not posting a video last week and for delaying this week's video. I have had a series of technical difficulties which have, kind of impeded me from posting these videos. But now I am back, all right? And the event that we're going to talk about today is the confirmation event. All right, so in the last class, if you guys remember a couple weeks ago, we talked about breakouts, all right? And what we're talking about now is confirmation, okay? And what the confirmation is in Wyckoff theory is in an accumulation, it's the last point of support, and in a distribution, it's the last point of supply. And that's essentially the retest of that range created during the accumulation or distribution. All right. Now, if you have ever watched any of those TA videos and whatnot on YouTube, you might have seen, always wait for a confirmation of a breakout. Now, Ruben, he kind of, analyzes this event from more of a trading perspective, right? And that's the perspective that I don't really like, buying breakouts, buying confirmations and whatnot, and, kind of making a trade with a set stop loss and a set take profit. These days, since I have had problems, with just paying too much attention to the charts, spending too much of my life into the charts, I honestly do not pay that much attention to it right now. All right. And I'm really being honest with you. I think there are better ways to, focus your attention in crypto. And I think, just thinking of a perfect method to do trading is probably not going to work if we're being honest. Right. Probably not being going to work. And if you're following, your favorite YouTubers, Crypto and whatnot, and you see all the results that they post, just do know that this is basically fake and that's not how they make their money. All right. Or at least that's my opinion. All right. But let's talk about what confirmation means in the context of Wyckoff theory and how that can make you make a little bit of wiser decisions when investing. Okay. And that's what I think the real value is in Wyckoff theory. So basically, what it is just going back into the range to retest it. All right. In the way that it can appear in the graph, and a few things that are, you know, interesting to see, as Ruben points here, what you're going to see basically is that you have two lines, right? These two lines are the limits of the range, and then you have, the whole Wyckoff shenanigans here, something like this, right? And then you break out, and then you might come back and retest that range again before continuing up. Okay, so this is the principle of the confirmation event. Now, there are some things that are interesting to see during this, breakout movements and confirmation movements. First, that the market travels a significant amount in the breakout. So, for example, if we see something like the market goes something like this, right? And it goes just a tiny bit above the upper line, and then it comes back to test it. It's not that interesting. But if you see a big breakout, if you see something like this, for example, then that is, that makes it a little bit more likely that the movement is going to continue up. All right. Secondly, the test movement has a really narrow range. It has really low volume candles, so very few people are expecting, are wanting to be risking their into the market when we see that range. So you see something, like this, like really small candles, right? You don't see a big candle back to test it right out in a V-shaped kind of bounce. Okay, that's not good to see. And finally, that the price does not re-enter the range, right? And as you can see, there's a really nice diagram that Ruben points here. And this is basically the ideal structure for a confirmation event. Of course, in the real world, we're not going to see something like that, right? You're probably not going to see something like that. And that's to be expected, right? So In the real world, we might see it re-enter the range briefly. We might see the volume not be so much lower, all right? But this is the ideal way that you want to see it in the graph. This is the way that gives you the most certainty that the breakout might be confirmed, right? So we see it breaking out, coming back down with lower volume. Not, this here, he specifically did, kind of a V-shaped, but as we've seen before, it's better that it takes a little while. We have narrower candles, right? The market takes its time to retest, right? Doesn't make it too quick, all right? So there are a few warning signals after the breakout. If we see it re-entering into the range, we see high volume, and we see, the candlesticks, the price movements being quite large, that is a warning sign that the market is kind of giving us, all right? Again, I'm not saying you guys should trade this. Specifically, I really don't like, trying to trade these events, all right? My approach is to try to identify accumulation and distribution zones so I can DCA my way in and DCA my way out of the market. Okay, so that's my main approach to the Wyckoff theory, right? As Ruben points here, there is some operational opportunity, all right? I'm not gonna get into this. If you want to, you can search for the PDF on the internet, and then you can, just go around and try to look at this part if you're interested into it. But I'm really not, wanting to read this to you guys because this is probably gonna lose you money if I'm being honest. All right? Now, quantifying the entry trigger, that is something that Ruben goes really into depth. And I think this is really important, all right? There are a bunch of ways that you could quantify the data, all right? The main one that he points to us here is using the volume profile. So I've traced the volume profile here. And let me just delete this bunch of gibberish here. So let me really quickly just delete this so it's a little bit cleaner. Okay, so I deleted it. And Ruben says that it is a wise idea to use the volume area, the value area high here. So this zone here and this zone here as the main zones of an accumulation or distribution event. And as you guys seen, it's not always that perfect, right? There is no perfect technique, right? The value area high and value area low might give you maybe an interesting, kind of an interesting starting point, but it's not definitive, okay? Specifically because it is really dynamic. So we can use, here in TradingView, we can use the developing value area here, and we can see that it is really dynamic, all right? And so it doesn't necessarily represent the accumulation range. What I think might be smarter is for you to trace it as the accumulation, goes on. So for example, in this accumulation here, you could trace it to being somewhere around here and somewhere around here. And as you guys seen, it's not always perfect, right? So it re-enters the range here, but we do see a little bit of lower volume as it goes down, and we see the volume going back up as it goes up. So that is another sign that this confirmation happened, all right? It's not always perfect, but you have a bunch of signs to look out for, and they're not all definitive, right? It can happen without any of them, and it can not happen with all of them. Okay, so it just gives you a little bit more certainty when affirming these kind of things, all right? So I think it's best to do it manually, all right? Again, this is a starting point, but looking at volume profile, and we're going to talk about this a little bit more in the Wyckoff 2.0 course that I'm going to do for the Crypto Garden once this course is over. Looking at the volume profile can give you a really deep understanding of the market, okay? So now let's talk a little bit about the events in the specific context of accumulation and distribution. All right, so this is the last point of support, this event here that we talked about a little bit earlier, and it happens sometimes, Ruben, kind of calls all of these events the last point of support, but it's kind of weird calling them that since it's the last one. So I think the last one is better to be called this specific one here. So We have the last point of support here when retest range, and we have all these, kind of retest movements as we go towards that last point of support. Okay. Now we have a few different types that we've been points out here. So we have the last point of support after the shaking. So we have a spring and a shakeout, and it happens kind of in between these zones, and it would be the testing of those events, and it is in that context that Ruben calls these points the last points of support. That is, it is retesting the range defined by this shaking events. There's the last points of support within the range that uh, it just comes here, and it might appear in the scenario of just denying a bearish reversal. And finally, there's the last point of support out of the range, which is retesting that range and affirming to us that accumulation or distribution is probably over. All right. Okay. So as we talked about earlier, the market moves by waves, right? We have accumulation, distribution, and the impulses that come after that during the building of that cause, and stuff like that, right? And finally, there's the last point of supply, which is basically the reverse. Okay, so we have the uptrend after the distribution, and boom, dump down and retest. Okay, the major sign of weakness and whatnot. The last point of supply, boom. So this is basically the opposite, as we've been talking all the way down, since the beginning of the course. The accumulation and the distribution, they are kind of symmetrical to each other, all right? And so it's no surprise that this one is basically the reverse of the previous one. So we have the last point supply aftershock, which is, basically after this major sign of weakness, we have it within the range and whatnot, okay? So yeah, this was it about confirmation. Try to look for all these signs that we talked about earlier. Don't think of it too much as a trading opportunity, all right? I personally don't like trading the markets. I like, accumulating, just like the market makers do, just DCAing in and DCAing out when I see accumulation and distribution opportunities. All right. So I think this has been it. If you want to sign up for the Crypto Garden, you can go to thecryptogarden.io and, join us at the garden. So yeah, this was it. Thank you and goodbye.